We're looking at the jobless claims falling again, 281,000. The survey was 288. So jobless claims continue to improve, and it looks like the economy is beginning to absorb some of the people who were on the sidelines. GDP is out. The only number that we have yet that I am seeing is the overall headline number of a 2% gain, which is much weaker than the 6.7% we had unrevised in the prior quarter, and lower than the 2.6% forecast. But we are looking now for the first release, and we're getting it in, as Tom says, dribs and drabs, as the internet is a little bit slower way of reporting this than we used to have. Personal consumption up 1.6%. That's better than the 9/10 forecast, but it's way down from 12% in the second quarter of the year. The GDP price index, 5.7%. So, Tom, this is interesting. You and I have talked about this before, the difference between nominal and real GDP. Inflation rising at almost 3 times the rate of real GDP.
Yeah, and Michael, as you look at the numbers here, and let me talk to you while you continue to digest the numbers. I'm trying to find domestic final sales to see the spirit of the domestic American economy. But Michael, to me, Lawrence Summers is looking at this screen and going, this looks very staggy, very inflation-y.
Well, that's going to be the issue. A lot of people are going to be talking about, does this support the stagflation idea? And I think you have to say it supports the inflation idea, at least for right now. We don't know how long inflation is going to remain elevated, but we are seeing signs in the more recent indicators. Remember, this is a backward look at the third quarter. In more recent indicators that we are getting some growth back, and we're expecting especially consumer spending to rise again. Now, I've got the numbers in front of me here for our spending, and it shows that durable goods spending on stuff fell 9.2%, while services rose on the month by 7.9%. So we are seeing that shift from buying stuff to buying experiences. The other number that everybody wants to know is non-residential fixed investment, and this is a big drop, 1.8%, 9.2% in the prior quarter. So business is not putting as much money into the economy, and I mentioned that with shipments, Tom. A lot of people can't get their stuff, and that's a problem. Exports down 2.5%.
Yeah, we learned that with the trade.
While imports were up 6.1%. So we can see why the trade deficit falls the way it does.
You keep digesting, folks. Lagarde speaking. We're going to get to that in a moment. Lisa Bramwitz, I just really want to point out, my first look at the headline numbers is we're going to see an American media in the next 24 hours talking stagflation.
Yeah, the idea here that this edifies the idea of higher prices, faster inflation, and slower growth. What do the central banks do with that? Just want to give you the response in markets. As you would expect, actually, longer-term yields in the U.S. do come down a touch. The dollar strengthens just a touch, nothing to really write home about. But what you do see overall is this feeling that the Fed is going to have less of an incentive to hike as quickly. You see the 2-year yield also come down, and that, frankly, we are moving back to a normal that does actually resemble what we used to see. The idea here now, the 30-year yield, 1.94%, and the 2-10 spread actually contracts even more, Tom. The idea here of slower growth ahead, and these price increases are not actually completely benign when it comes to the growth outlook. I do wonder, Mike, after you parse through these numbers, if you come away with a sense that the Fed is correct, that that markets are wrong in pricing in so many rate hikes.
Yeah, I think there are 2 problems there. Right now, the markets may be wrong because we anticipate a rebound in the fourth quarter, but it's also because of the nature of this whole thing. It's also impossible to know exactly how the economy is going to behave going forward. I mentioned before we went into this that I was going to be watching inventories. Inventories, after 3 months of decline, actually rose during the month, $90.8 billion. So that adds to GDP. Now, we talk about how companies can't get their stuff, but it does suggest that maybe things aren't as bad as they appear going forward.